Hi traders, and welcome to my video on the double top and double bottom pattern indicator. In this video I'm going to show you how you can use this indicator to capture moves such as this one for over 400 pips, and also this one for over 300 pips. Okay, so the double top and double bottom patterns basically is a chart formation which involves support and resistance, and the indicator aims to pinpoint these on the chart for you, as you can see here with these triangular boxes we have. Okay, so the blue one is to signal a double bottom, and then a blue arrow to signify completion of that pattern, and then a potential uptrend. And for the double top, we have a red triangle followed by a red arrow to confirm completion of the pattern and a potential downtrend. Okay, as you can see, you wouldn't blindly take each arrow signal as it is. Instead, you can do your additional market analysis, which I'll run through in this video, to confirm entries. Okay, that being said, you will catch the odd good move if you traded them blindly. As you can see here, this was a good uptrend. This was a good downtrend, but then in other instances, such as this one, may not necessarily be buying or selling at the ideal time. And I do think there are quite a few limitations to this indicator, which I'm going to also run through, but primarily, for example, a move like this, you can see that the indicator didn't actually pick out any opportunities for entry, whereas I can see lots of opportunities for entry here. I wouldn't solely trade only based on double top or double bottom patterns. For example, we can see markets making higher lows, sorry, here. In this, we're in a clear uptrend here, and there's ample opportunities to enter on breakouts of support, breakouts of resistance, like here, this resistance level, a nice breakout there, holds up a support here and a continuation. You can see that the double top and double bottom pattern indicator didn't actually pick an entry here. Breakout there to the upside as well, didn't pick that. Breakout there to the upside, didn't pick that. Breakout there to the upside. There's no coincidence we have these big breakout candles around this resistance in this uptrend. Okay, so you don't necessarily need any indicators to be picking out those entries. Just identify the direction of the trend and simply trade. You can see there, breakouts of resistance in an uptrend, or for a downtrend, what we can do is just, we can see we're in a downtrend, and you can just trade. Downtrend, pullback, breakout there, big breakout candle, okay? Pullback here, consolidation, and breakout to the downside. Arguably, you would have drawn support like this. You've got your M chart formation, breakout to the downside, support becomes resistance, continuation. Same thing happened here. It's NFP, non-farms payroll candle, first Friday of the month. Could have used that momentum to jump in on this move here. Okay, no fancy indicators for this, just pure price action trading in a downtrend, trading breakouts of support after a pullback. Okay, so pullback, breakout, and that way we can maximize the potential of each trend by timing our entry. Okay, and you can see that the double top, double bottom pattern indicator didn't pick any of these. It just emphasizes, as I said, limitations to indicators. To be fair, it did pick this pattern up here, which, would have been an ideal sell position. But there will be instances, as you can see here from the buy signal, where you just end up getting whipsawed in and out of the market if you take every signal blindly. Instead, what I would do is I would first determine the direction of the trend and then look to enter based on a breakout. Keep an eye on candlestick patterns as well, which can add additional confirmation. For example, in this breakout area here, we have a 3 inside down candlestick formation, which is basically a bullish candle, followed by a bearish candle that's at least 50% the body of the bullish candle. Then a final third bearish candle that breaks below the initial bullish candle. You can see there would have been a good signal. In fact, we had another one there, 3 inside down, bullish candle, bearish candle breaks below the low of the bullish. And we have this level of resistance, a nice breakout to the downside there, market making lower highs as well. The good thing about this one is the indicator did point it out. You can see if you wanted to mark them manually, all you need to do for, I do have videos on double top patterns and double bottom patterns, but basically what they are is when there's a level for a double top, you want a level of resistance that's been touched at least 2 times, like here, okay, 1, 2, which is can be a reversal signal, okay, and then you draw support within the pattern, okay, which is known as the neckline. So here, for example, okay, so that's the support within it. And then you wait for a breakout to the downside. As you can see there, after that breakout, this support level then became resistance, almost bang on there, which could have been an entry point in itself here. You can just wait for confirmation of the trend to continue, then the pullback, good support level and breakout there. Interestingly, for this one, I would actually call this a triple top myself. Okay, so you do triple top basically is the same concept as a double top. It's just that the resistance would have been tested at least 3 times. So you can see there 1, 2, 3. Interestingly, you could, if we draw it like this, you can see that the market's making lower highs as well. So, you know, as the first signals were there for the downtrend to start. Okay. So you can have triple tops. I do as well have videos on those, and you can also find triple top and triple bottom indicators. But for the purpose of this video, we'll focus on the double top and double bottom. So that's basically how to spot a double top. Just as with a buy, just for the buy, the double bottom is resistance level that's been tested at least twice. You can see here once, twice there. Okay, and then the principle is the same. You just draw your resistance within that and look for a breakout. However, I like to look at the overall picture. Okay, and the overall picture being here, the market is actually in a downwards trajectory. Okay, so I'd probably be waiting for a breakout here. You can see from that big candle there. Okay, that's probably what a lot of traders were doing. I wouldn't have really taken action on this double bottom simply because we're in this downwards trend. I'd wait at least for the price to turn around in a direction and trade with the trend. Okay, I like to trend trade simply because you can capture big moves like these ones that we've looked at for hundreds of pips. Look, if we took this entry there, that breakout after the trend had been established, you know, potential of around 250 pips, could have placed our stop loss just below this low here. Okay, so around 25 pips, which is reasonable for this 1 hour chart time frame. And we could use a trailing stop just below the lows all the way up. Okay, just to lock in profits if price does turn around and maximize the move as much as possible. You can of course close part of the position on the way up, bank some pips. What I wouldn't do is enter here with a 25 pip stop loss and just panic and get excited, you know, here 50 pips or great, you know, 2-to-1 risk to reward ratio, fantastic. No, because you're just going to leave all that on the table. You can of course re-enter. The thing is, the more you re-enter, the higher your chances are of making a mistake and getting a trading decision wrong, or ending up, you know, buying at the high in an uptrend or selling at the low in a downtrend. I prefer to get in as early as possible and ride the trend. Okay, so like here, if we got in on this breakout, you know, probably would have been taken out with our trailing stop. If we use the same trailing stop, well, first stop loss above the recent high, so you're looking around probably around 15 pips, which is really tight again. And then move the trailing stop above these highs all the way down, just trailing price as much as possible to maximize the move. And then once price turns around, if we get taken out, say our last trailing stop was on this high here and we get taken out, still looking at 320 odd pips, which is really good in the space of a few weeks. Okay. And then, yeah, when you start seeing the market make these lower highs, you know, or a double bottom pattern in the opposite direction, you might want to consider taking profit, exiting the position. Okay. This is a 1 hour chart, euro dollar 1 hour chart. The reason I'm using a 1 hour chart is just because I find the higher chart time frames to be more reliable, and this applies to double top and double bottom patterns, but also other technical indicators, price action patterns, candlestick formations, support, resistance, trend lines, etc. Okay, I just find the signals are more reliable because there's more data on the 1 hour, 4 hour, daily, weekly, monthly charts. I don't see why we would stress ourselves out, pull our hair out trying to trade the 1 minute and 5 minute charts when you can capture big moves like this for hundreds of pips rather than trying to scalp a few pips here and there and end up paying loads in brokers fees, spread, slippage, etc. in the process. It just also means less time chart watching, which is also another bonus. Okay, so that's the and of course good trading discipline as well. Okay, don't let negative emotions like fear, anger, greed, or revenge trading, FOMO, fear of missing out, get in your way. Have a plan and stick to it. Okay, but going back to the double bottom and double top patterns, this indicator, the one thing I don't like, I wouldn't use it personally, just simply because it may not draw the lines how I like. I don't, I think indicators can't always see what the human eye can. For example, I'm sure if we look at this downtrend, here, for example, like this may be a double top. This could be a triple top, in my opinion, simply because I see this as a level of resistance here. Okay, let me just remove this line. This level here of resistance, look, it's been tested 1, 2, 3 times. Okay, so the indicator, in my opinion, should have at least picked up a double top within there. It didn't. Okay, for whatever reason. But you can see if we had that triple top or double top and we drew our support line or the neckline within it, it would have been a good breakout trade. Support becomes resistance, and we can enter in on this trend. Okay, and just as some may argue, well, what about that? Is that not a double top? Okay, granted it's not horizontal line, but it doesn't always have to be, as you can see up here. Okay, so that could have been a double top, and that also becomes a wedge pattern as well. Consolidation, a big breakout, as you see there. In fact, it could also be a triple top. Okay, so it's open to interpretation. I mean, I'm not sure why you'd use an indicator like this when you can just draw the levels yourself. I mean, it's relatively easy. You're just looking for support, resistance that's been tested at least twice, and you can configure the EA inputs, but really it just depends so much on your trading strategy, because this indicator has picked this up as the support, okay? But I wouldn't have traded in this, choppy market conditions, but if I did, who's to say that's not a double bottom pattern there? That support level's been tested twice, okay? Who's to say that's not a double top there? Test, or even a triple top test, okay? And then, then you might draw within that the neckline as that, okay? And the breakout to the downside. And you can see there are probably traders who were doing that. And you look at this move to the downside here, market making these lower highs, lots of bearish price action, okay? So indicators, they can't always see what the human eye can see, and I definitely won't blindly take the signals. This is a perfect example. I can see the market has reached a strong point of resistance here. Okay, resistance there. It's making lower highs. I'm not going to look to buy against the potential downward trend this 4 minute, especially after this big move up. You just be buying at the high. You're going to get caught in a bull trap. Okay. Bull trap is for the traders who are late to the trend and buying at the top. And whenever traders are taking their profits, causes a shift to the downside. Also, stop losses get taken out, and we get this, which is momentum to the downside. I mean, yeah, I'd much rather be looking. You could even be looking at a double top pattern in the opposite direction here. Look at this. Tested resistance here, tested resistance here. Why does the indicator not show that as a potential turnaround point to get into this sell trade? It's almost a carbon copy of the one that we traded over here. You see this one? Okay, breakout, pullback, breakout, and if we go back, there's a reason this happens. It's not coincidence. Okay, consolidation, breakout, pullback. Yeah, you can see continuation. Just draw your support level, breakout, and away you go. With good money management, even if you're wrong, say as I said, it's a 1 hour chart. A 20 pip stop loss is reasonable for a 1 hour chart. It does vary. I don't use fixed stop losses. Let's say for this entry here, this breakout, our stop loss was below the low. It could be 15 pips. But then forever entries like this one, the breakout here, it was, you know, around 20 to 30 pips. Okay, so I don't use rigid stop loss levels, and I certainly won't use a fixed take profit and just end up potentially leaving lots of pips on the table. I'll take what the market will give me, because it could be 50 pips, it could be 500 pips. But everyone's different, so you know, use your money management accordingly. It's just point I was trying to reiterate is if we have a 20 pip stop loss, okay, and we take 3 losses in a row and we're down 60 pips, and we're not going to cry about it, because we know if we catch a big trend, you know, let's just say we took this entry here, you know, what's that, 130 pips potential on there, you know, we can make back the loss and then a lot more on top. And then eventually you capture a move like this one on this breakout, and you're looking at 360 pips potential, and you know, you take those 60 pips off you lost and you add the 300 there and the 100, you know, over here, you're up 400 pips at least overall. So it just shows, emphasizes the importance of money management compared to if you would had a 20 pip stop loss and a 40 pip take profit, let's say 2-to-1 risk to reward ratio, and you know, you'd only be up, what would that be, 40 plus 40, 80 minus the 6, you'd only be up 20 pips in these 2 big moves with all this potential. Just goes to show the importance of not just timing your entry, but money management and discipline. Okay, so point being, I like to trade in the direction of the trend, look for breakouts of support and resistance, and personally, I can see why the double top and double bottom patterns indicate it could be useful for those who don't want to draw them themselves. I just think it's not going to always draw them how you'd want. Okay, this is just a limitation to indicators. You know, it's not looking at the overall bigger picture. Like it, okay, it's drawn that double bottom pattern there, suggesting a bullish trade. But as I said, we don't want to get caught in this downwards trend. Okay, instead, I'd look like if it was picking these, you know, moves in this on the way up, well, that'd be fantastic, you know. But it's not, you know, like here. Okay, is this not a double bottom? I mean, some people might look at that and say, okay, support's tested, even triple bottom, support's tested. I'm going to look for a breakout, whether that is the breakout like we drew there, or that is breakout like there. Either way, yeah, either way, that for me is a valid level of support. Okay, I'm not only going to trade support if it's a double bottom or triple bottom. It can, you know, it could be quadruple bottom or even more, you know, sometimes less. But then you can look at your candle patterns for confirmation. You see this candle pattern here, this hanging man pattern, a bullish hanging man. This, you know, you can see there's no coincidence there's this big bar here. And why is it? Because price is rejected, this is bounced off this support level here, got the market is making these higher lows. Okay, we've got a really bullish candlestick pattern here. You know, the bears tried to push the market down, the bulls were so strong they pushed it all the way back up. Okay, and then we have a breakout of this line here and also this line here, so 2 resistance breakouts. So I've got a diamond formation, a wedge pattern, as you know, all the signs were there for this to happen. And even that trade there on that one bar, you know, there's 60 plus pips profit potential in that move alone. And I don't even think that would be an ideal time to trade, simply because we're buying near the top. Getting in around here and grabbing a few hundred pips would be much more desirable. So I'm just, you know, I'm going to discuss limitations of indicators. I'm not going to tell you they're the best thing ever, and if you use them and, you know, they're like crystal balls, they're not. In fact, I would go as far as saying I would just remove this indicator from my chart and trade it pure price action with good money management myself. Yeah, and like I said, higher chart time frames, in my opinion, tend to have a more reliable signal, simply because they contain more price data. Okay, so perhaps you might want to consider, if you want to fight with the 1 minute and 5 minute charts all day for a few pips here and there if you want to try and capture big moves. And you can use strategies like this on any trading instrument, Forex, crypto, stocks, commodities, indices, bonds, etc. And there's always going to be big trends to catch as well. Okay, well, hopefully you found something useful in this video. I do appreciate you watching. If you've liked it, please click the like button and also subscribe to my channel, and I'll hopefully catch you on the next one. Take care.